Hello, YouTubers, friends, compatriots, who live show desolate shirts, peasants, vassals. I'm a useful idiot, and today I want to talk about institutional investors, and that's Wall Street, who are going around the world and buying up distressed properties. Of course, the most interesting aspect of this is that all these big banks and all these institutional investors, of course, are the ones that helped cause the financial collapse of 2008. And that includes the real estate collapse. So here we have all the same players, all the big banks going around scooping up distressed properties all over the world. And some will make the argument that, well, that's good, that institutional investors are out there filling the void and driving real estate prices back up. And that will be to the advantage of everyone, including normal home buyers. But that's not really true, because these institutional investors have little incentive to put too much into these properties. They're buying them up. They will have every incentive to jack up the rents. And what they're mostly interested in is creating securities, because now Blackstone, for example, has created the first rental securities, and that's what they're interested in, is creating a whole batch of new exotic financial instruments, rental securities, out of this new market. And so what has Blackstone done in the United States? Well, I'll recap what I've talked about in previous videos. There is no housing recovery in the United States. It's driven almost exclusively by foreign investors, foreign buyers, and then institutional investors in the United States, like Blackstone. Blackstone has been spending $100 million a week since 2012 on real estate in the United States. They own 40,000 homes, and they've almost single-handedly driven the real estate market back up to what the powers that be call normal. And their idea of normal is reinflating back to the inflated bubble prices of 2007. And to them, that is getting back to normal. But there's deflationary forces in play, and it should force real estate prices back down at some point. But the institutional investors who are owners of Blackstone are the same too big to fail banks that we always talk about: Morgan Stanley, Citigroup, Deutsche Bank, UBS, Bank of America, Goldman Sachs, JP Morgan. And so this is the group that has invested $7.5 billion in the last couple of years in rental properties in the United States. And of course, they're getting these things at rock bottom prices and paying cash and buying them up in batches. I think in Atlanta they bought something like 10,000 houses in one day. But anyway, now they plan to put another $6.8 billion into a Euro real estate fund, and they're already active. And so as I looked around, I noticed that Blackstone and all the other institutional investors, the ones behind the financial collapse of 2008, are now scouring the globe, every country, to take advantage of their collapsed real estate markets. So we have Blackstone also in Spain. Real estate has dropped 40 to 70% since 2007 in Spain, and actually property values continue to plummet there. And what Blackstone is getting in Spain is actually rental homes, distressed properties that have tenants in them. So they're buying up renters as well as rentals. And this reinforces the idea that they're probably going to continue to create rental securities off of this market. And Spain is pushing people to rent by abolishing tax breaks for homeowners. And they also passed legislation that allows landlords to raise rents faster than inflation. And there's two reasons for this. One is that Spain had the highest rate of home ownership in Europe, 83%. And they want to move more people to the rental market. So this is a good time for Blackstone to get in there at the beginning of this rush towards rental properties. And then not only that, the legislation's passed a law so that companies like Blackstone can raise the rents faster than inflation, which undoubtedly they will do, and they're probably behind this legislation. And to give you an idea what a feeding frenzy it is, we also have all the institutional investors bidding against each other. For example, Goldman Sachs, even though it's an institutional owner of Blackstone, is also working as Goldman Sachs in that same market. And they recently outbid Blackstone on 32 social housing developments sold by the government. And Goldman Sachs paid 20% over asking price. So that gives you an idea how lowball the prices they're getting for these properties are. And Spain is a good market for Blackstone to go into because they have 26% unemployment. They have a bad bank that can just shuffle the distressed properties straight from the public into the hands of Blackstone. And they have continued deterioration in the real estate market in Spain, which will continue to help out Blackstone as well. And they're probably going to be lining up for another bailout. But interestingly enough, the institutional investors know what's really going on in the Eurozone, and a company like Blackstone is betting on the rental market doubling in the next few years. So what do they know about further deterioration in Spain and in the Eurozone? Rents have dropped 15 to 20%, but investors are relying on job insecurity, wage freezes, firings, falling wages, foreclosures, and mortgage headaches to translate into future demand. So they're betting on continued deterioration in the Eurozone, and they're also betting on deterioration elsewhere. Turns out Blackstone is also in India. They have, as a company, Blackstone has $248 billion of assets under management, and so they can go around the world and pay cash and not have much leverage to buy up these properties. Real estate is now the best performing business within Blackstone, with revenues up 50% just in the last quarter. And they use different strategies in different real estate markets. So in the United States, they're buying up rental properties in order to create rental-backed securities. In Spain, they're going there and buying up properties that already have renters in them, probably for the same reason, to create rental-backed securities. And then in India, they're buying up one of the largest portfolios of office space in India. So Blackstone is buying up 28 million square feet of office space in India. As I pointed out before, they bought it all at rock bottom prices with little leverage. And they plan to expand even more rapidly this year. So far, it has spent $800 million for its real estate portfolio. So think about that. In India, they've only spent $800 million completing deals at a fraction of the price the previous owners had paid. And they're spending $800 million, and they get 28 million square feet of office space. So that gives you an idea of the killer prices they're getting on things. And Blackstone serves clients like foreign companies as well. So they're helping companies like Goldman Sachs and Barclays and Siemens and Nokia and Google and Yahoo, all helping them out with office space in places like India. So they can create their own bargain basement prices for their special clientele. And we also have Blackstone moving into Ireland, buying up commercial property. No surprise there. Another country with a huge real estate collapse. So we're going to see this more and more and more. And in fact, Blackstone is also raising money for its first Asian real estate fund, targeting another $4 billion. So over a couple of years, after having no investments really to speak of in real estate, we now have just one company alone, Blackstone, putting nearly $20 billion into real estate, distressed real estate, on a global scale, taking advantage of this fire sale going on. And this isn't including state assets that are sold by companies like Greece that they're also snapping up, also taking advantage of the economic collapse that they caused. And Blackstone, of course, as I pointed out, is not the only one doing it. We have all the same institutional owners that run Blackstone: Morgan Stanley, Citigroup, Deutsche Bank, UBS, Bank of America, Goldman Sachs, JP Morgan. They're all operating out there on their own, duplicating these same processes. So to describe it as a feeding frenzy is very accurate. And we also have a lot of other hedge funds. We have BlackRock out there. We also have Apollo Global Management. They have $3.9 billion they're going to put into distressed European assets, and their specialty is hotels and resorts. So they're cashing in on buying a lot of hotels and resorts that have really plummeted in value over the Depression, and hopefully at some point the economies will rebound and people will vacation again, and then these investments will pay dividends. And but the bottom line, of course, they also know that the ECB will back everything. That's why they have no problem. Apollo Global Management went in and bought 11,000 UK mortgages, and they're also buying up Irish commercial properties. So we have Apollo Management and Blackstone both feeding on the Carcass of Ireland as well. So it's a global phenomenon, and they will continue to buoy the real estate market in the United States, this false housing recovery, this new bubble, and they are going to create those same feedback loops all over the globe, feasting on the carcass of the real estate collapse. I'm a useful idiot. Don't you be one too.